Hi and welcome to this week's video analysis. This is for the week starting the 18th of February 2019. I'm going to start off with the dollar index and then break down the other currency pairs, just highlighting what we're seeing for the week ahead. So we're starting off with the dollar index, the daily chart. We have posted a reversal candle, a bearish outside day on Friday. However, the strength of this initial recovery is a bit of a concern. And if we go to the larger time frames, this is a weekly chart. I'm wondering whether or not we're actually going to make this level here, which is 97.86. So at the moment, there's a mild bearish bias, but we really need to break down shorter time frames, maybe look for a head and shoulders formation, maybe in the 4-hour chart, really to give this index a bit more of a bias. At the moment, it's very mixed indeed. Euro dollar, we've broken out of this channel formation to the downside. Could be seen as a flag pattern. The measured move target for the flag is around about 1.1165. The long-term bias, opposite to the dollar, obviously, is still to the upside. We look like we're forming an ending wedge pattern. We've got trend line support at 1.1118. One thing that should also be noted is that most formations have 3 points of contact. So we've got 1, 2. So we haven't actually made that third point of contact yet. So I think the intraday bias is still to the downside, with a focus to flip the bias basically in this range here. To the upside, we've got pretty decent resistance this week at 113.45. Again, we've seen mixed volatile trading for the last 5 days. Really, to get a decent reversal formation in here, and again looking at the 4-hour chart, if we post a bullish reverse head and shoulders pattern, then obviously we'll look at this formation not to complete. Sterling dollar daily chart, we still believe we're forming a bullish head and shoulders pattern. We've got decent support at 127.65. I think we made an 85 low, was it last week? Let's just have a check. 127.73. So yeah, about 8 points off where our bespoke support is at the moment. Again, long-term bias, we prefer to buy into this dip here. Intraday, or at the beginning of next week, we've got resistance at 129.55. It's also close to this swing high. So again, breaking down shorter time frames, are we going to see an inside pattern here that would indicate that this base is now in place? Dollar Swiss, still grinding higher in this ending wedge formation. The long-term bias is still to the break to the downside. I keep an eye on this RSI level. You know, we were talking about free touches before. Sometimes happens on the indicators as well. So the RSI moving up to around about 59.50, and we might see a topping formation. If not, then again, we've only hit this trend line twice. So there's scope to hit it 3 times, 101.64. That sort of prime area to get short. To the downside, there is support this week at 99.32, again looking quite strong. So I think we're going to be range bound for the time being. Dollar yen, we're still grinding higher in this this channel formation. We did see a strong flip to the downside on Thursday after a lot weaker than expected retail sales from the US, but then we've seen little in the way of follow-through selling for dollar yen. The immediate bias is to the downside, but only if 110.47 holds on Monday. Otherwise it flips again, and we're looking to this area, 161.8%. Also an area that's been quite pivotal. So it was support, will now become resistance, and it's also excuse me, pretty close to the top of this channel formation. So again, sort of range bound. I think buying dips, or even buying a break at this 110.47 level early on next week. Dollar CAD, again we're sort of in between support and resistance. I think that dollar CAD is, or CAD in particular, if you're looking at sterling CAD, euro CAD, I think they're looking like they're going to make some sort of basing formations. So even though the bias for the dollar, or the long-term bias for the dollar, is to the downside, I think that we could see a stronger move still in dollar CAD to the upside. As long as 132.85 holds early next week, then we expect a deeper correction lower. 131.80 is the previous swing low. Could form maybe a head and shoulders pattern, reverse head and shoulders, so left shoulder, head, neckline here, and then down in the right shoulder. There's monthly support at 131.56. If I see a dip down there, we'll monitor price action for a move again to the upside. So really the range for this corrective move lower, I think, is here. And to the upside, prime resistance at the beginning of next week is 132.85. Aussie dollar, really sort of not boring. None of the currency pairs are boring, but this sort of, it's lacking real price action at the moment. You know, we're sort of getting a pretty prolonged period of consolidation, 7 days, really, where we've seen little in the way of net change. We have broken the wedge formation to the downside. 71.65 is reverse trendline resistance. 71.67 is our bespoke resistance. So obviously we're still looking at selling into rallies, but only for a move down towards here, which is around about 70 the figure. Euro sterling, keep on going on about this one. I'm sort of not desperate, but looking for that move higher to sell into what I believe is going to be a long-term move to the downside. Next week, we've got support at 86.97, but what we're looking for is to be able to sell into rallies around about 88.61. Again, impulse move to the downside, 5 waves, 1, 2, 3, 4, 5. This is a choppy move higher as far as I'm concerned. 1, 2, 3, probably going to come lower in 3 waves, and then perhaps higher in 3 waves. But like I said, as long as this level holds this month as well, and we're only on the 18th of February, then the bias is still going to be to the downside. So short-term bias is to buy into dips around about 87 the figure. The long-term bias, and hopefully for a really good move to the downside, is to sell into rallies about 88.61. Okay guys, hope you have a good week, and we'll speak to you again soon. Many thanks.